Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is May 3rd, Wednesday. We'll have one more after this in the week, and then we'll wrap it up for the week. Today we are going to take a look at Starbucks. I know my wife spends quite a bit of money there. She likes their tea and a couple of their fancy coffees there. I get a tea every now and again. So let's jump right in the video. Now this page is my investing criteria. You can pause it, take a look. What I'm looking for here, if it's not a financial company, you can add the last one in. For financial companies, you can really look for price per book for all of them. But if it is not a financial company, I'm looking at 4 of the top 7 to be a potential investment to add to the portfolio, or one within the portfolio I'm looking to make sure still meets the criteria. And if it is a financial company like a bank, I'm looking for 5 of the 8. Again, you can stop it here and read through this criteria. And back to Starbucks. Check them out if you want to. Their homepage, www.starbucks.com, or go check out one of their stores. Like I said, you may already be a patron of theirs. Our story begins in 1971 along the cobblestone streets of Seattle's historic Pike Place Market. It was here where Starbucks opened its first store, offering fresh roasted coffee beans, tea, and spices from around the world for our customers to take home. Our name was inspired by the classic tale Moby Dick, evoking the seafaring tradition of the early coffee traders. 10 years later, a young New Yorker named Howard Schultz would walk through these doors and become captivated with Starbucks coffee from his first sip. After joining the company in 1982, a different cobblestone road would lead him to another discovery. It was on a trip to Milan in 1983 that Howard first experienced Italy's coffee houses, and he returned to Seattle inspired to bring the warmth and artistry of the coffee culture to Starbucks. By 1987, we swapped our brown aprons for green ones and embarked on our next chapter as a coffee house. Fun fact, I actually spent some time in Milan back in the late 90s, 1999. You can read through the rest of this. Might have been there, well, he was in there at 1983. So you can read the rest of this. It talks about their further expansion, and then obviously they've expanded all around the globe. Now they are a retailer that sells coffee and some food items as well. Coffees and teas is their bread and butter. Again, www.starbucks.com is their homepage if you want to know more about them. Now, the reason we are taking a look at them, Starbucks Corporation, ticker SBUX. This is out of the consumer discretionary sector, down on the day 9.17%. Huge drop on the day. That is a big drop for even an entire quarter or a year, right? To see it on a day, that's an epic drop right there. Big drop there. So we want to take a look at them. Closed out the day at $103.96. 52-week range as low as $68.39, as high as $115.48. So they are right up against their 52-week high, really, not even close to their 52-week low. A lot to drop if they're to get back there. Average volume, 5.6 million. Today was 24.2. So there must have been something, news come out. It might have been the Fed raising rates, maybe. People tightening their belts a little with the rates continuing to go up and trying to get inflation under control here. But big drop during the day. I'd have to see if there was some negative news out there. That's not a normal drop. Market cap of 119.585 billion. A beta of 0.94, so just less volatile, just a little less volatile than the overall market. Price to earnings PE ratio 36.22. That is a very elevated PE ratio. This would be the type of PE ratio you might see on a fast-growing tech company, right, with very high margins. Earnings per share EPS is $2.87. And their next earnings date is August 1st. For dividends, $2.12. They are quarterly payers, divide by 4. We'll see that here in a little bit. Dividend yield sitting at 1.85. This is a little low for me, unless they are growing extremely fast. We'll see that here in a little bit as well. Ex-dividend date, the next one coming up is May 11th, 2023. And their one-year target, at least according to Yahoo Finance, $112.66. So they do see some potential upside in the stock price from where it currently sits. And as I always say, you want to get in here and do more than just top level. You want to get in and do some research on the company. Go into the statistics, look at their margins, look at their free cash flow over here in financials. You'll find their balance sheet, their free cash flow, their income statement. Again, you want to see their assets are over liabilities. You want to see growing revenue over time. You want to see their debt coming down. They're paying down debt. You want to look at all those factors in here. One that I like to look at under statistics, if you go down under dividends and splits, it's a dividend yield theory to see if the company is potentially undervalued. What you do is you take a look at the 5-year dividend average, 1.92, and their current dividend yield at 1.85, or what they call over here their forward dividend yield, 1.85. This is lower than their 5-year average. So that speaks to some potential overvaluation on this one. This was potentially overvalued according to dividend yield theory. If this number was higher than the 5-year average, it would speak to some potential undervaluation. Now, here's another one I wanted to point out, because according to Yahoo Finance, their payout ratio is 69.44. But when we get over to another source, you'll see that it is a little different. So you'd want to check that maybe on a third source to see which one is accurate. Here they're saying 69.44%, which is under my 75% basis that I like to see. I like to see 75% or lower. Obviously, the lower the better. And anything over 75%, unless it's a REIT or a business development company or something like that, where they have to pay out more, or they try to pay out more to their shareholders because of the legal obligations for a REIT, and for business development companies, it's just because they want to entice you as an investor with higher payouts. Now, the other one I like to look at under financials is free cash flow. That is what the dividend is paid out of. So you want to see that growing over time. 2019, we see 3.2 million. 2020, big drop off. Not sure, this probably was related to COVID-19 here. Big drop off there. Back up in 2021 to 4.5 million, but 2022, from 2021 to 2022, that's a big drop there, and it looks like today it's around 2.1. So not sure what the drop is there, but 2019 to 2022 is not growing. That is not good to see. So something fishy there. Might want to look into that a little bit, but they may be opening some more stores and using some free cash flow to invest back in the company. And if they're doing that, that would be all right for future growth, but definitely want to see this growing, and it is not. And it's kind of up and down all over the place. Now, another source I like, stockanalysis.com, not affiliated with them or Yahoo Finance that we saw on the previous page. Just another source I like to go to. They give the information in a little different manner, but same information, statistics, the financials, the forecast, the dividends. You can find all the same information you can find on the previous Yahoo page. But they also have some analysts that have taken a look at this, 25 stock analysts. They call it a consensus buy. They do have a low estimate of $86, right? This would be a 17.28% decrease in the stock price, which, I'll be honest with you, I would like it back in the 90s or under, right? I'd like it in mid 94, 95 range or under. That's where I'd be interested in this one, starting to pick up and add a position there. Average estimate of $112.08. That would be a 7.81% increase. And if it happened to hit their high, $136, that would be a 30.82% increase in the stock price. All the while, you could collect that 1.8% plus dividend. Now, I like to go into statistics on this page. And what I'm looking at here is return on equity and return on invested capital. ROE, I like 10% above. This is negative 41.1%. That is not good. That is not a good number. Not sure what's going on there. They may be reinvesting a lot of capital into the business, so would give you a negative return on equity, but that's not a good one. And return on invested capital, I like 10% or above. This is a good one, 14%. So that's nice to see. But the return on equity is a little disappointing, right? Now I'll jump over, like I mentioned on the previous page. This is from stockanalysis.com, but their payout ratio does not match up with what we're seeing on Yahoo Finance. So I would back check this. 82.9% is above what I like to see at 75% or lower. Does have decent dividend growth at 8.51%. I clipped back here to 2022. They were paying out 49 cents. Looks like in November they raised it up to 53 cents, and they've been at 53 cents ever since. So that is Starbucks. Huge drop on the day, over 9%. Some issues I see. Return on equity is a little wonky. Their dividend yield theory says that they're a little overvalued. So I would look for more of a pullback. Like I said, I would like these back in the mid 90s, 94, 95 or lower is where I'd look at this. And if the inflation stays high and rates continue to go up, this one might continue to drop back. So maybe throw this on the watch list. It is a company my wife uses. Like I said, she buys a lot of coffee and tea there, and I know my kids like some of their snacks. I think they have like the cake balls on a stick or something like that. They like those. So interested in this company at the right price. I don't think it's there yet. I think it still has some room to go down. Big drop today, might be worth adding to the watch. With that said, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think. What do you think about Starbucks? Do you use them? Do you buy your coffee and tea there? Is it a stock in your portfolio or one that you are interested in, or are you avoiding it altogether? Let me know down in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics. If you have some stocks you'd like me to cover in a stock pick of the day video, go ahead and drop it down in the comment section and I will try to work it in. and constructive criticism. If there's things you don't like, you want me to change, go ahead and drop them down there. I'll take them with a big old grain of salt. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey for educational and entertainment purposes. Investing all risk and money should never invest any amount not come to losing. Always do your own research, best based on your situation, circumstances, and select criteria, or seek legal advice counsel or a certified financial advisor.